This conference will now be recorded.
Okay, good evening, everybody. This is Greg Morton. It is Saturday, July 9th, 2022, and this is the weekend update for Canslim growth stock investors from the Greenville Eastside IBD meetup group and the Stockyard meetup group. So as always, this is for educational purposes only. Not recommending any stocks or securities to buy or sell. All investing has substantial risk of big losses, so we want to learn first and only then invest. So tonight we'll look at the M factor, talk about what we saw this past week, constructive action or destructive action. My little hint for the week is sort of do the hokey pokey with the moving average lines, because putting one foot in, taking one foot out, and turning around a little bit. So we'll just keep an eye and see if we can keep making progress there this coming week. Oh, shoot. There we go. We'll talk about a pond to fish in, and we'll talk about our monthly educational meetings. So we'll look at the M factor first. This is the most powerful letter in the world and the most important letter in Canslim. So per O'Neill and IBD, we want to diagnose or interpret. We don't want to predict. We look at three things in this order. First, the actions of leading stocks. Now we are seeing some leaders breaking out and we're seeing some new leaders setting up. So that is a constructive change that has developed recently. Actions of stocks owned, the group teaching portfolio, we're slowly wading back in. We'll look at the market pulse, distribution day count, price and volume on the indexes, and the color and book tracking. So let's get out of here and go take a look at that. Go over to MarketSmith first. So here's the daily on the NASDAQ. We had a 4-day week this week, as Monday was the July 4th holiday. Index was up 4 days in a row, came back above the 21-day. The volume, this is actually wedging, not in a good way. You can see the volume is trending down. Of course, it is a summer, it is a holiday week, but we certainly would like to have seen that better. RS line has moved up a little bit, came back above the 10 and the 21-day and doing battle right there clearly at the 50-day moving average line. So you can see over here, tried to come up to there, hit its head up here on the 200-day, came up back toward the 50, didn't even make it, came up back toward the 50, didn't even make it. And so here we are. We'll see what happens this time. We're still about 27% off, so still firmly in bear market territory at this time. S&P 500 also constructively back above the 21-day, right at 20% off, went down almost to 25% off the high, and not even back up to battling with the 50-day yet. So we'll have to see what it does, and you sort of see the same volume fall off this week. NYSE hasn't even retaken the 21-day, so this now is actually looking worse. Dow did retake the 21-day. Is it going to be able to get up here and battle with the 50, or is it going to do the hokey pokey and pull this foot back below the 21-day line? Russell, back above the 21-day, so that's constructive. Still got this diving 50-day, and you can see where it's hit its head on it there, hit its head on it there. So the change of character really would be solidified if it can break back through those and hold on all these indexes. S&P 600 battling with the 21-day, still below the 50-day. So that looks a little bit worse also. So that's what we've got there. If we go over to the coloring book, we do have some constructive changes. Some of the MMTS factors, the NASDAQ went to green, S&P 500 came up to yellow, Dow had been at yellow, Russell came to yellow, IBD still uptrend under pressure. Exposure count did up to 1 on the market school model, so that's up to 30% invested. Still have a power outage, window of opportunity opened, that's constructive. We do still have net new lows though, so that is not constructive. And I have a buy sell day count of 4 buying days and 12 selling days. in the last 25-day window, going back to that orange dot up there, which starts the 25-day count. We only have one distribution day currently on the NASDAQ per IBD. Within the 25-day window, we have a total of 5. One on the S&P 500, total of 6 within the 25-day window, and 2 on the Dow, total of 7 within the 25-day window, if I have my counts right. So that's where we are. You know, we had the follow-through days back here on the 24th, but those had a sort of asterisk beside them because the volume came in only due to the Russell rebalancing in the last 5 minutes. Volume was running lower all day on all 3 of those indexes. And then you can see we don't have any breakouts. They're in dark green and any Canslim breakouts. So we don't even have any breakouts. Have an early entry here on Celsius. And then this week, finally, we see some breakouts. Funco, EVH, Halo, and CLFD, although that one's thin, it only trades 10 million, so that one's got an asterisk beside it also. So we just have to keep an eye on those and see if these breakouts work, and keep an eye on the other ones that are setting up. And then finally, let's go back. We're here. If we look at the group teaching portfolio, was kind of keeping it in 30% or less invested for risk control. This week, with the progress that was made, just pushed it just a little bit past that. Just have 3 positions. The only concentrated one is Halo, which is actually 110% size. Standard size is 80,000. Still down 9.74% year to date, but you know, did have some good days this week to at least put this month back in the green currently. We'll see what happens as we move forward. We have earnings seasons kicking off, and a lot of things we'll have to keep an eye on. So we looked at that. I'm just going to say overall, still seems like a whipsaw market with a lot of flaws, like those volume problems I was showing you with the indexes going up, but the volume wedging down. So I'm going to go with these signs for this week. Slow, proceed with caution, and caution, potential speed bumps ahead, because we have earnings seasons coming, all the political news, Russia, supply chain. It's a great time for these companies to bring out their dirty laundry, like I was joking with Marty about on Twitter. There's plenty of bricks in the wall of worry right now, so whatever junk in their books they need to get out there, this will be the quarter to do it, because there'll be plenty of things to blame. Inflation, consumer confidence, whatever. Take your pick. Reminder, don't feed the bears. Do not feed them your fiscal capital, and certainly do not feed them your mental capital. They'll eat everything you give them and come back for more. So risk management, still rule 1. Big advantage we have as individual investors is to be not invested at all, or to be lightly invested when the market's bad or when we're still in this bear market. We don't want to squander that one advantage that we really have. So let's quick mention, we'll talk about these in more detail at our meeting coming up. Where's the new leadership going to come from? We do not want to focus on the old leaders. We're not looking at Roblox, DocuSign, Peloton, Zoom. Looking for new leadership. The chances of those companies coming back and leading again at this time in a new rally would be very rare. 1 in 8 or less only comes back to lead again. So where are we seeing some new potential emerge? Well, this weekend, all we have to do is look at the IBD 50 and some top industry groups. So here's IBD 50, and let's just look at all the medical stocks. So starting off, we have Vertex, Harmony. Those have been covered in the paper, been covered on IBD Live. Got Cross Country Healthcare, Lilly, Alexis, AMN Healthcare. I don't even know how to pronounce that one. AXNX, Merck, Global Blood Therapeutics, Pfizer, United Health, Cortcept, Humana, Adapt Health, Haemonix, AZN, Waters, Catalent, and United Therapeutics. I mean, you've got 19 of the IBD 50 are medical stocks or medical related. That's 38%. That's a change in character. We haven't seen that before. So this looks like an area to see. I No, we haven't seen it in recent weeks. When I say we haven't seen it before, it's only popped up. Last couple weeks, we've been able to see medical emerging. If we look in the industry groups, look at all the medical that are highlighted. This goes all the way through industry group 75. Look at how they've been improving, where they are this week, where they were 3 weeks ago, where they were 6 weeks ago, 12, 12 to 10, 26 to 11, 34 to 20, 41 to 21, 40 to 28, 107 to 30. Here's one that's software and medical, 82 to 37. So you can just see real improvement there. And then underlined in blue, we see a little bit of software creeping back in. They're sort of recession proof. You're just writing code. You don't have a lot of supply chain issues or other things. So maybe that's an area we will see some leaders emerge also. We'll just have to keep an eye on it. And then finally, we see the same theme on medicals, the once a month feature in the newspaper, recent buys by funds that have been top performing funds over the last 36 months. So based on their 3-year performance, these are what some of the top rated funds are buying in their most recent reported quarters. And just look again at all the medical stocks on that list. I just don't think there's anything else that's even close as far in numbers and dominating that list. So real quickly, we met a month ago. We have a meeting coming up this week. Here was our agenda. We spent a lot of time walking through the 2007 to 2009 bear market. We actually did it day by day. It was stressful, just like the real one was, to even do it. It was emotional to walk through that and see those severe 3 legs down and the time period that it spanned. But it was very helpful. And I think this is the bear kind of most analogous to the one we're in now as far as time frame and what we're seeing, on potential depth. Maybe not as deep. This one went down 56 or 57%. So we're going to follow up. We meet this Tuesday, 7 p.m. Eastern time. These are the 2-hour big monthly meetings. We'll look at the M factor. I'll go over some Canslim nuggets from IBD Live, from the podcast, things Matt Caruso's talked about, and more. I have a few more this month than we had last month. Market Smith tips and tricks. If we have anything new, we'll look at those. And then our big educational topic, we're going to go back to that bear market. And this time we're going to overlay the key news events that were happening during that time frame. What was the Fed doing? This was the financial crisis. Banks were plunging. There were buyouts with government backing them. And then the one that the government wouldn't back was somebody coming in and buying Lehman Brothers, which resulted in them filing bankruptcy at like 2:15 a.m. on a Sunday morning when that deal didn't go through over the weekend. And then we'll take a break, and then we're going to stay with the 2007 and 2009 bear market, try to get out of the stressful part of it, and we're going to look at some of the winners that came out of that market. What did those charts look like? How did they set up during the bear market? And do we see anything today that is looking like those winners back then? Then we'll take a quick look at the EV space like we do each month, including the cousin stocks, to see if there's any activities there. Of course, we have one of the EV manufacturers in the group teaching portfolio. Going to talk a little bit about Halo and why that developed as a high conviction stock. In my mind, IPO market, nothing to discuss. It's still dead as a doornail. And then we'll do open mic chart review stocks you guys ask about for 15 minutes or sometimes longer. Sometimes that runs a good 30 minutes. So you can sign up that at the Stockyard Meetup site. They're recorded if you can't attend live. Tuition's $12 a meeting. You get the recording, slide decks, links to webinars, articles, anything we talk about during the meeting that I can send out that is helpful. If you haven't attended one of our meetings, first-time attendees get a courtesy copy of last month's meeting, recording, slide deck, and all the articles. Also, the earlier meetings are available to order. Those are $15 each. If you don't have a written set of sell rules, great time to be working on that. So I spent 3 months covering that in great detail, and you would be able to have your own written sell rule set, as well as we looked at mine during the last one of those 3. Also, September, October 2021 covered a complete weekend routine for the Canslim investor, how to build a watch list, how to pick the best of the best, how to build that dream team, so to speak. So that's it. Here's the contact information. Of course, you're on the Stockyard YouTube page if you're watching this. And again, you can go to the Stockyard Meetup site and register for the meeting coming up this Tuesday. So that's it. I'm out of here. You guys have a great weekend routine.